More than 20 investors with Suraya Property Group are seeking to be compensated for money they put in over 5 years ago with hopes of securing homes, alleging that the company is playing a cat-and-mouse game with them on the issue.
The latest allegations against the Suraya Property Group are symptomatic of the challenges facing the high-end segment of the residential property market in the capital city, as Alex Mwangi now reports.
Give us our money back with interest.
Grace Wanjiro is one of the investors with Suraya Property Group who has waited for years in the belief that she will one day live under the roof of a nice house stemming from her hard toil. She now finds herself in a quagmire that threatens to affect generations.
I had 2 units at Links, and to do this, I had to convince my 3 children to also invest with me, and we are undergoing the same problem. I, as the mother, invested 4.760 million. These houses have been rained on, they have cracks, so even if they came to complete them, I would rather have my money back, because they have said this very many times since 2014 when we were supposed to get our houses.
Wanjiro borrowed some of the funds to invest from a bank and is now paying interest without the benefit of seeing the investment turn into reality.
You go to their office, they tell you that there is nothing they can do, they do not know what to do, and then when you push them, they tell you, you can do now what you want.
Wanjiro's heartbreaking case may be attributable to mismanagement on the part of Suraya Property Group, coupled with the economic headwinds that the high-end property market in Nairobi is currently facing.
When prices go too far, people make the adjustments, which is to try and construct their own. So there's been construction going outside Nairobi in the suburban areas, and that in itself is actually having a corrective effect on how much you can sell an apartment, however fancy, within the Nairobi metropolitan area.
The housing industry has been growing robustly over the years, but then in recent times we have faced instances where some companies are facing challenges in meeting the obligations of investors who have put in money with them to construct some houses. What explains this paradox?
Well, I think it might have something to do with the fact that for the last 3 years, perhaps they've saturated the market at that level. So maybe for apartments and block buildings, and we are speaking mostly about Nairobi. So within Nairobi, it's possible that they have actually saturated that market. Incomes have not grown far enough to be able to match their pricing.
The price of land and the lengthy processes involved in getting various permits have combined to dampen the growth of the housing sector for the middle and lower income segments.
And one of the things that many of them are doing right now is construction companies or other real estate companies are adjusting downwards the prices for rents, and obviously I think for mortgages as well.
For the investors with the Suraya Property Group, the way to get back the millions of shillings they invested now shifts to the Directorate of Criminal Investigations in what may perhaps end up in the corridors of justice. Alex Mwangi, NTV.